Is it bear with me, B-E-A-R, or B-A-R-E?
B-A-R. Bear is a bear. Yeah. Bear is a verb. Bear and all. Bear with me.
I don't know, actually. You do hear me?
Yeah, so I think it's a little bit delayed. Hey. Is this working? Should be fine. Can you guys hear me? Yeah, David, I'm actually not speaking yet. Can you hear this? Should be able to. Once I get going, it's fine. Can anyone hear me? If you can hear me, then let me know in the Discord chat. Is the sound okay? And is the video okay? Sweet. So we'll use this for now. This is an unlisted webinar, so people aren't going to be able to find it. Just don't share the location. After today, if this works for now, then I'll be sending an email to everyone with a private link, and it'll just be private webinars on YouTube through YouTube for now. Cool. 1 second. So I'm just testing this right now, make sure it's going to work. Nice. Let me see the chat here. Chat. And maybe we can just do everything through the live chat on the webinar. Well, it's up to you guys. What do you think? Should we use the live chat directly on the YouTube webinar, or should we use the Discord chat for questions? Yeah, okay. So we'll use the Discord chat for questions. Got to create a channel to chat. Okay. Cool. So all the questions we'll just do on Discord. We'll use this link for today. I'll get you guys a new link for tomorrow. Let's see. And if the stream goes down or anything happens, just let me know in the Discord chat so I can figure that out. It's going to be a short one today. I actually have to have like an emergency dental procedure now from everything that's happening. And that'll be in like an hour and a half. So we'll just get a quick one in today. I kind of give you my take on what's going on in the markets today. I hope everyone's being safe and conservative. Obviously, we don't have anything running like crazy, which is just fine. This does happen, and when it does, you know, I've spoken with several of you and all of you at times in webinars, but when we get days like today, let me go to like my market viewer. Let me see. 1 second. Hey. So this is equity feed. This is just my really broad, low volume market viewer, so you can kind of see anything that's running at all, even on low volume. And let me get to it quick. Let me pull it up here quickly. Hold on. So we can see obviously the biggest gainer today, and it's doing huge volume, is DDE. They have some merger news. Float's somewhat bigger, if this is correct. I haven't gone through their filings because I'm not interested in trading it. Yeah, so DDE was our biggest gainer today. I've basically ignored it all day. I don't know if any of you took a piece, but if you did, good for you. I don't generally play merger plays as a catalyst. Obviously, you can see the daily. It's actually kind of been an uptrend since January. Had an initial spike, pullback, and just kind of been grinding up for a while now. So you actually had a really nice gap up breakout. But like I said, merger news, I wasn't really feeling like chasing it. But you know, if I were to have played this, it would have been like this 325 area. Looking for a breakout of our pre-market highs and then the initial highs from this morning. But as you can see, there's only, 25-30 cents of upside there had you been buying. Now it's failing to get back over VWAP. It was holding 3 all day, and now it's kind of was fading into the 290s. So I don't see too much potential here. Obviously, if this continues to hold 3, you may get some kind of move, but I don't see any definitive pattern that I can play. Looks like it has the makings of a fade on it to me. Just the fact that it can't get over VWAP. So let me know if you guys heard everything I just said about DDE in the Discord chat, please. Sweet. All right, so this should work for now, this setup. Cool. The other cool thing is that I'll make it available to you guys on YouTube, like on, for now until it moves to the website. So anyone who's missing webinars can come back and check it out. I think that should be helpful since not everyone can get to every webinar. 1 second. Close the door, please. Anyways, sorry about that. Sorry for the last couple weeks. It's been rough, but things should be very smooth starting now, which is good. So we'll go back to our normal schedule. I will do some impromptu webinars whenever I'm trading and there's something useful, or just randomly, like the schedule is supposed to be set at Monday mornings, Wednesday morning and close, Tuesday and Thursday close. But if it's like a Tuesday or Thursday morning and I feel like doing a webinar, we'll just kind of jam out an impromptu webinar. There's a lot of names in chat. Some of them are double names, which is fine. But I will be, so we're supposed to cap this group at 15 total. I think that's manageable. I'd like us to form kind of a tight-knit little group where we're all on the same page all the time. That's my hopes. So this is basically the full group now that's locked in for the rest of the year. Should be good. I like this group. So anyways, we'll get back into my take since I don't have too much time today. So we got DDE. It's hanging in there. It's doing huge volume. It broke 3, only got down to 290 basically. So you have shorts from this morning who are obviously a little concerned now that it didn't break down much harder than it did right there. but it doesn't necessarily surprise me. It's still, I mean, we're getting into power hour now. We got about an hour and 15 minutes left, so it's one to watch. I don't have too much a definitive plan. If you're doing anything, you got to risk 290 at this point. You know, it's kind of the gap out level, but like I said, with the merger news, I don't know. I don't know what to do with this chart, so I leave it alone, which is perfectly fine. A couple others I've got an eye on. Cure was a midday perk on news, some phase 2 or phase 1-2 news or something. Oh, not even preclinical data. Now, when biotechs are moving and it's a low float, sometimes preclinical data will move a stock. Obviously, it did move this stock. You can see the daily beat up chart, gap down. I'd imagine there's warrants in here, some sort of financing. Double top here in December. And since then, it's failed to get back up to 3 and finally drop back down to 1, which is actually year support basically down here at $1. They have data from a preclinical study that's suggesting one of their drugs may be able to mitigate or reverse the cognitive impact of Alzheimer's, which is big news. There are several companies who have been trying to do this without, you know, great success. It's a really tough disease, so I'd like to keep that in mind. But it was something. The float is somewhere in the 12 million range, so it's not a tiny float. It did have the perk on that news, which came out at like 11.50, you can see. But since then, it's just trading really illiquidly. It hasn't even done 1 million yet. Not too much here. I mean, the intraday pattern on the 5 minutes setting up okay, just such little volume. Even if this were to break out end of day, I don't see too much hopes for it. You got a ton of resistance here at $1.75. You know, obviously 2 will be resistance. So there's not too much there for me on Cure. It's just something I'm watching. CVSI was another one that I'm going to be keeping an eye on. You had kind of a multi-week breakout over 2 with resistance here in the high 2s, 280. This is an OTC weed stock, and obviously they are applying for an uplisting to NASDAQ. So sector, good sector. Weed sector has been pretty strong, obviously. I just don't know quite what to do with this. Obviously, it's holding up really well here in the 2s. I'll probably leave it alone. I'm sure, I have a feeling that this thing may get going for a couple days and possibly break out over this $3 level. Pretty crazy. But it is a slower moving OTC, like I mentioned earlier, so not 100% sure what to do with it. Arles has been running for a couple days. No play for me now. It's a 3rd green day, so as far as long, should be running into some resistance here. Such an ugly chart. So no play for me here long on the 2nd green day. And that's all that's really on my radar, guys. It's very slow today. Days like today are days where I'm glad I wasn't sitting watching all day and had some doctor's appointments and whatnot. And it seems to have been like that for a couple days now. I wasn't able to really trade last week, but I was keeping an eye on my scans. And there just hasn't been much going on. It's been quite slow, which is okay. You know, there are going to be weeks like this. There are going to be, at times, a whole month or longer. You know, I mean, it's not always just hot, 100% pre-market gainers and 200% runners and 300% runners. And this is something I recognized last week already. So, you know, I think Wednesday, Thursday, Friday got really slow. The volume was kind of dying off. Probably a lot of people, you know, getting their vacations in. It is July. Myself included, you know. So definitely got to be careful. Don't be too aggressive, especially to the long side. I feel like low volume favors shorts a little bit more. Granted, they're not going to get, you know, big spikes. Actually, let's check out DDE's perking up here now. So that's kind of what I was talking about earlier. You had this level at $3 here that was holding really well all day. You can see very clearly $3 on the 5-minute chart was holding all day. $3 cracked, but only 10 cents, and then got right back above 3. And now you're getting a little pop back over VWAP, which is cool. Chart-wise, this could have been somewhat of a bear trap. You got people shorting on the break at 3 to the downside, just like you would be buying a breakout over 350, or in this case the consolidation up here at 310. So it's one of those things. It's been trading in the channel all day. The lower channel broke down, so people tried shorting it, but ran into some real support at 290, and so now shorts are covering a bit. But like I said, this is probably the strongest stock today. I mean, it's the biggest gainer. It's held up decently. It does have a catalyst that people like. It is trading huge volume today, 25.7 mil as of right now. But I'm just not too comfortable with it. You may get it overnight. This could squeeze after hours kind of thing and gap up and go to 4 tomorrow. I just don't feel like chasing it. I don't feel like holding overnight. But if, out of all these plays, this would be the only one I would basically consider even. There just isn't too much. So that's kind of my take. I am going to keep watching this. You never know. At this point, I got to risk 290. So if I want to start building a position going into power hour here, I mean, I would probably look for a dip to the low 3s again, and then risk 10 cents. That being said, if this perk fails with an hour left in the day and can't, reestablish VWAP here and hold VWAP, then it could easily fail. So most of the volume was this morning. This big volume, you can see these big volume candles, and this was actually the biggest volume candle, was the spike to 350. Did almost $1 million there that minute. So, all of that candle occurred over 320. So this is a very important candle to me. 320 is actually a pretty important level. You could see from this morning, the morning pre-market high, and then it struggled at 320 this morning with the big volume. So 320 is kind of like, yeah, there's this midday consolidation, but it is low volume for the most part. A lot of fake outs. I actually watched a couple fake outs earlier, so that's why midday sucks. I mean, any of this, you could have said, oh, double bottom, triple bottom, quadruple bottom, fake out, all that stuff, but nothing matters till volume comes in, which it did ramp up here a little bit. You can see it's kind of ramping. So we'll watch TDE, and but like I said, there's just not too much. Cure is trying to kind of perk up towards its high that it said earlier. There may be another day 2 on this, maybe kind of under the radar. It was a midday news release. But like I said, reward-wise, you just don't have the greatest reward on this as of now. Biotechs haven't been that hot. So, yeah, it's one of those things. Any questions? Can you guys still hear me? Yeah, no problem, Chris. I'm actually running on my backup Wi-Fi because we've had some internet issues at the office. When the internet's better, it'll be much better. But yeah, I will upload the stream this afternoon at some point. So we got Cure kind of pushing up on it. There was a little volume perk here, kind of pushing back towards the 148 high. I mean, if this does break 148, you probably scalp of 10 cents or 20 cents, but just not a play for me. Risk reward is not good enough. And that's, you know, and that's the one thing you really do need to ask yourself on every trade. If nothing else, what's my risk reward? Is the risk enough for me? Is the reward enough for me to take risk? Are the pieces aligned in my favor? Am I going to, you know, is it too risky? In this case, yeah, I don't like the risk reward ratio. It's not great. So I won't take the trade on Cure, even if I miss out on 20 cents or however much it would be. DDE, you know, that it's just a perk, could have easily been a fake out. Like I said, there's quite a bit of volume here, all above this level. So even though VWAP is sitting at 314, you know, you got to see it hold in VWAP and then pressing. If this gets back down to 290, it's most likely toast, in my opinion. But like I said, it is merger, so merger news, I'm not sure what to do with it. I haven't, you know, I'm not necessarily qualified to do valuations on mergers. One of those things. If you don't feel great about the trade, then you shouldn't be taking the trade. You know, if it's just kind of like speculative, maybe small size, okay, take a tiny loss. But even then, you may be wasting your time. Especially with smaller accounts, like, you know, couple $100 losses here and there over and over again will eat into your account. So here's a fade back to 3. We'll see. Papa John asked on Market View, do I filter out the really high float stocks? No, I actually don't. I keep it pretty much everything on there. It's such a broad scan. Like, I mean, I really do keep it all in there for the most part. Let me get to it real quick. So yeah, so on the market view, I mean, you know, you can see I have a $50,000 minimum on this. So a lot of this is noise. I'm not ever going to trade something like this unless maybe news just hit and it's a great catalyst or something like that. So I mean, this is not the best scan to use, like for a noob especially. There's too much noise for them to separate out good plays from bad plays. But just with my experience, you know, and a lot of you have this same experience, you know, you're not going to be trading this. It's done 50,000 volume. You know, you're not probably going to be trading this with the 40K volume. You know, 400 volume, 43.6 million float, which is, like I said, you have to take these float numbers with a grain of salt. But obviously, you know, if you want here's my issue with filtering out high float stocks, okay? It may say it's a high float, but all float data is either inaccurate or delayed, okay? So something may say it's got 100 million float and you don't have it on your scan, okay? But maybe yesterday they did a reverse stock split. Maybe they did a 20-to-1 reverse stock split. So instead of 100 million float, the float's actually like 5 million, okay? That's really important to know, obviously. So although I have float numbers on here, you know, I do in my head, obviously I'm thinking, all right, that's 100 million float, probably not going to move. I've got to adjust expectations for the float size. You still do have to, I mean, I just don't want to miss something because I filtered out float and it's not accurate. If that makes sense. That's kind of my idea behind it. I don't want to miss a move just because my scan is wrong, shows a huge float and it's wrong. Float size for me, you know, it comes down to volume. If the floats, so I'll still pull up a chart. If it's up, if one of these stocks is up 50, 60, 70% and it's only done a certain amount of volume, and that says it's got a huge float, you may have to reconsider and investigate, well, why is it moving so quickly on lower volume? You know, it's definitely one of those things. So let's watch Cure for educational purposes. Secure just broke out over high a day. And some volume came in. You know, good volume. More volume than before. I'm sure this was shorted like pretty quickly by early shorts. But then it's so illiquid, they can't really get out either. So that's why you got to be careful, like these midday spikes with volume. I don't really like to play them. Like sometimes I will, but when it's a quick spike of volume and then just dying volume levels, you got to be super careful. So, you know, this is not a chart that I really like. I mean, the 5 minutes okay. If you look, you know, bigger time frames, but it's still pretty illiquid. Nice little breakout over highs, and it reached 153. So you had 5 cents there so far. We'll see if volume can come in and actually move this thing. On a day like today where volume's low anyways, pretty much everywhere, it's, you know, I'm gonna take it easy. Yeah, Mike asked what the form is. The form when a reverse split goes through. Yeah, Tango Baker's correct. It's usually just an 8K, stating that they, you know, that they've done the reverse stock split and give you some details. That's simple. In my case, and I'm sure on a lot of platforms, but like, you know, street smart edge, if a stock does a reverse split, I'll catch it on the daily. So like BIOC, for example, this is what I get. Reverse split, 1 for 30. And they're pretty on top of them. So when I see this, you know, so I get them right on my charts, and then that means, all right, go through the filings, and check out the details, see what's going on with this company. That kind of thing. And obviously, like Chris, if you guys were in the chat last week, he's kind of been breaking it down even way further than I have, which is really cool. And he's come up with a lot of data supporting his thesis on what these companies are doing, which is reverse split. They need to keep their price over $1 to stay in compliance with NASDAQ, and then they also have to fulfill the 2.5 million shareholder equity number, and the only way to do that is to basically do an offering. So it's been kind of like split, pump, dump. Same as any other pattern for the most part. It's just good to know. When these pumps happen, they can get these stocks up. So, with these low floats, you can really have some great gains, long and short. So. Papa John said the reading SEC DVD will tell you all about it. And Mike said he fell asleep 3 times watching that in the first 10 minutes. Yes, it is the most boring DVD that you could ever watch. But one sec. Yeah, Givo was spectacular. Givo, I was buying so low, and I was buying it in the 4s. That Givo was upsetting. That moved $20 that day. It was crazy. Over the next 2 days, it got to like 25 or 26 bucks, I think. Yes, Mike, BIOC was a reverse split. And then last week we had stock to a reverse split in offering the same day. They started popping the day of the reverse split, which is why I don't play reverse split days. In general, reverse split days are a good short, in general. But so far, Cure has broken the 148 that it said earlier, and it only spiked 10 cents. Like I said, you probably had a 10-cent scalp there. Now, if if it holds this 150 level, then who knows? We may get a continuation tomorrow, and you may get 20 or 30 cents or more. I'm not going to be able to watch after hours, so I'm not going to touch it. But this is the kind of play, if volume was sustained, you know, I would be looking to dip by this in the 148 level if it were to come back, test, and hold. Yeah. David said, so when there is a reverse split, I'll play it the second day. No, that's not how it works. You wait for the catalyst. So they do the reverse split. A lot of times it's attacked by shorts day one. They can fade for like 3, 4, 5 days, a week, 2 weeks. As long as they're not actively diluting already and the float stays low, you wait for the first PR day. First PR day after reverse split is when you've been seeing these big moves. So you don't play reverse split based on a reverse split. You play reverse split based when the PR comes out. PR meaning news, David. It's a press release. So, you know, they'll do a reverse split, and then all of a sudden, a week later, they have some new product or some licensing deal or some, you know, whatever it is, some kind of pump, you know, some kind of they try to get a catalyst out there. Yeah, it's one of those things that Chris just said 90 days is the biggest time frame he's seen. And yeah, and I'm sure, you know, whatever it is, you don't know the circumstances of the company. You don't know what they're going through and when they need money or why. So it's one of those things, you know, going through the filings, you can see if a company needs money, but just because a company needs money, it doesn't mean they're going to put out a PR the next day. The only thing you can do is be aware of it. And when the PR does come out, and as long as they haven't been actively diluting, then you can take advantage of it. So I'm going to have to leave for this dentist appointment in another 10 minutes or so. So any questions we have going into market close, let's get them in the next 10 minutes. Still not great volume on Cure, but it is on radars now at least. You know, it passed 1 million in volume. A lot of people are scanning for at least 1 million in volume. A lot of people aren't scanning for dollar volume. You know, a lot of people are just scanning volume. I mean, that's the most basic thing, and most people are very basic with their trading. So it's good to be aware of that. Obviously, it did pull, and it pulled right back to 148. So there's one test holding 148. I'm still not going to touch it. There's some potential here for sure. You know, volume has picked up going into the close now, and it is closing near highs. So there's a chance for a quick gap up and maybe into after hours. Maybe a breakout here, like if you can get over 2, but I'm not going to be able to watch it, so I'm not going to play it. You know, it meets some of my criteria, not all of it. Chris said, so on a trade like Cure, what are we looking for to take something like this overnight for a gap up? Yeah, or maybe just a gap up into after hours even. If you get momentum into close. Think about a day like today, there's not much running. DDE's holding 3, but that's it. Cure is now the second biggest listed gainer. This is what's on radars now for people looking for overnights. Going into power hour, you get early shorts being squeezed. Like, you know, it's been kind of a liquid all day. But to me, this is the strongest chart today. There's not much else going into close that I would buy. David said, can I review the PED trade from last week? Yes. So this was the overnight that we did during the webinar. That was very tricky because let's get into like the 15-minute chart. Very tricky because we had this spike through 290. I had bought some when it kind of broke up out of this consolidation for a first green day. And I ended up with the average like at 280, 290, I think. So I was kind of chasing it. Was it this day? Yeah, I believe it was. So I grabbed some on the dip, and obviously you had this pull, pre-market pull down to 240. Let me see what I was looking at. This was a little while ago. Hold on. Yeah, so you had a morning panic, but it pulled right to consolidation at 240, which is, I'm sorry, I think, so I'm wrong. So I bought this on this perk like 250 maybe. Does anyone remember my entry? Ah, here it is. Yep, okay, here it is. I found it. Sorry, guys. So it was this day. We had the perk in the morning. We had consolidation here, 160, 175. And then here's the morning when it pulled and then ripped that day. So my average was 180. I had gotten this on the way up, kind of into close. It was closing strong, looked like a first green day, closing over its highs. 190 was my average. I'm sorry, 180, 180, 190, one of the two. So my risk on this trade was basically 170. I remember it had that consolidation throughout the day, and that's what I was risking. Originally my plan was gap up morning spike. Instead we got gap down, but it did hold this really key level here at 175. So I was just kind of patient with it. I didn't have a huge position. I was able to be patient, and then you got a sweet red green move, and off to the races. I dished it off like in the 250s. So it's one of those things where, okay, so if you're buying a stock into close and you're expecting a gap up and spike to sell into, but instead it gaps down, absolutely, if cutting losses is something that you have to do. This could have easily failed in the morning. So it's one of those things. It ended up being a great dip buy if you wanted to dip buy it. But I was just able to be patient, and I stuck with my original risk level as opposed to the plan to just cut if it gaps down. I don't necessarily like just cutting when it gaps down. That's why what's so important is your risk reward when you initially take the trade. I would have been willing to hold it down to like 170. This consolidation level was pretty important to me, and it was the high the day before. And it's just what has been the biggest gainer all year, the biggest one-day gainer all year. This was 1,000% move. So yeah, it's first green day pattern. This was the green day I was buying. You had a small dip and then a rip out, and then you had a rip. So tough trade, but that's why risk levels are so important. And I wouldn't, if I were to have cut on the gap down, that's very safe. That's perfectly fine. Only reason I didn't, because my size was controlled, my risk was controlled, and it was really that simple. So a tricky one, but one where and this is why you risk off consolidation and not just like breakout levels. I got a little lucky. It could have easily failed down here at 180 and then 170 and then came right back down to the 150s. Papa John asked, do I normally keep the risk level from the previous day, or does it just depend on the specific trade? Totally depends on the specific trade. But generally, yes. Like if there's a full day of consolidation I'm risking off of, I'm going to keep that as risk. Only case where I adjust it is if it needs to be adjusted. So if instead of this gap down back towards support from the day before, if we got a gap up, then maybe my new risk would have been 2, after it broke 2 and then held 2. So you can adjust risk, but for this specific trade, I just wasn't up enough to where I was happy with it, and I wasn't down enough to where I needed to cut. Does that make sense? So put it this way, if this had gapped down below support, like, you know, I would have, below the previous day support, I would have cut it 100%. The second that hit like 269, I probably at 270, I would have been definitely eager to cut my position. The fact that it held 275, that was enough for me to just hold on a little bit longer, kind of give it to 270. I had like 5 cent wiggle room, and it never got there. So there's a bit of luck there. You know, buyers did step in, but the pattern was good. It's a former runner. It's the first green day, and I just didn't hold it long enough. I definitely could have been a little smarter, but I was just, you know, at that point when stuff like that happens at times, I was just grateful to be green. And sometimes that happens and I'll take the trade off a little too early. But yeah, I mean, it's one of the, that is a tricky situation where you know, if you cut it, that's safe, okay? If you're expecting gap up spike and it gaps down and drops, then you're being safe. You're letting the stock work. Are there times where if a stock is not reacting the way you think it should, do you then cut? Or do you wait to see if the stock fails to my risk level? Which is a good question. Yeah, there are plenty of times when a stock is just not doing what I want and I'll cut it for break even. I won't even let it get to my risk. Usually when I get that sense, that's because there's something in the price action that's not working. A double top or some kind of hidden seller, like whatever it is. If a stock's not reacting the way I want, a lot of times I'll cut it. It happens. It's going to happen and it's going to keep happening, but all you can do is be safe. You know, the safer you are, the better. So if you get a funny feeling about a trade and it's not doing what you want, yeah, absolutely cut it. Don't have to wait to let it test your risk level. And sometimes, and a lot of times, it's going to rip without you. Okay. But at least you were safe, you know. It's kind of a 50-50, you know. If you know, half the time, yeah, you would have made money holding. Half the time you would have missed out. You would have lost money holding. So the whole point is to maximize your edge on a trade. If you're just sitting there hoping it's going to do something and it's not doing that, then you're just like everyone else who's sitting there hoping it does the same thing too and who are all ready to cut if it doesn't do that. So I mean, you can't cut too quickly, put it that way. I mean, there is a line, you know, if you're just buying and selling a lot and you're over trading and just like taking scratches and commissions start to pile up and whatever it is, it's not good. But as long as you're picking good risk levels for the most part, you know, there are times where your intuition and seeing the price action, you'll know that it's done. It's not going to keep going. So why sit there and let it reach your risk level? And you may be wrong and it may rip, but that does not matter. It really doesn't. In retrospect, it's just on to the next ticker, on to the next ticker. Like where, okay, that didn't work. Okay, it ripped without me. Who cares? We'll go to the next ticker. You know, find a better opportunity where you can have more conviction and better risk reward. Always better risk reward. Always a new opportunity. Very, very important to get that kind of mind frame where you're like not dwelling on losses. Oh, it ripped without me. Who fucking cares? You know, excuse my French, but that's the kind of attitude that will ruin the next trade for you and the next trade. The best attitude you can have is learn from the losses, learn from your mistakes, move to the next trade over and over and over and over again. So don't be pissed when you miss moves. I mean, obviously it's natural if you had a great position and you would have had a huge gain, whatever it is, but that's going to happen to you all the time. So you get used to it, you know. These are the kind of emotions you got to learn to deal with constructively and press forward, you know. Obviously, you got to look back. You got to always look back and see what you do wrong and look back for bad tendencies and good tendencies. Look back for patterns that haven't worked for you and that have worked for you, and then stick to the ones that work for you. If you're getting into new patterns, okay, you got to give it time. You know, you can't just try a new pattern like 3 times and have 3 losses and say, oh, this pattern doesn't work. You got to track them and you got to refine and you got to figure out how to play the pattern. And then realize, hey, you know what? Like maybe this pattern's not in play right now, because that happens. The markets are cyclical. The patterns are cyclical. So sometimes multi-day breakouts on OTCs are going to crush for you, and you could swing them for like 3 to 5 days and crush. Sometimes they're not there, so you got to figure something else out. Sometimes dip buying NASDAQ earnings winners is working, so do that. Sometimes it's not there, so don't do that. And that's a big part of this game, is getting your feel around the markets, understanding what's going on. Like, I'm not really trading today because I understand that there's not too much to trade. Cure broke out. Like I said, you literally had 10 cents of upside there. So if you wanted to scalp that breakout, you could have scalped it. But that's about it. So you know, like I said, when you're looking at a chart like this, you got to keep your expectations in line, especially when you see a chart like this where there's overhead resistance all the way throughout to $3. I'm going to look through the filings later just to see if there's a play going into tomorrow. But that's what I mean about realistic expectations. So like I said, QR, you could scalp this, get 10 cents. You should have been ready to sell it 10 cents later. If not, you're looking at 2 cents, you know. I mean, this could hold. It's holding up really well here. It's holding breakout level really well going into close. So you may see another push and it may gap up and get a little bit more tomorrow, but I don't care. At this point, risk to me, I mean, I would have to risk like 147, but that could easily break down. It's a small intraday level with low volume. So more like 135, 120s, like for maybe 20 cents of upside, you know, if this can get going to the 170s. So 1-to-1 risk reward for me on that, not good enough. Papa John said that's really been helping me lately since you told me that. On to the next. Yeah, I mean, that's been my mantra for a while now, like my one main mantra, and that keeps me from getting too excited about any gain or loss. You know what I mean? It keeps me trading more systematically. It's not about this trade. It's about what you do over the next 500 trades that's going to dictate your year, you know, not the one trade. So, I mean, we're all looking for the big gains, of course, but it's not about big gains. It's about consistent gains, even if they're consistently small. So that, you know, once you're consistently winning small, then you can kind of start to size up. And only until then can you do that. And only until you've realized what your strengths and weaknesses are can you really attack your strengths and minimize your weaknesses. So don't get caught up in one trade ever, you know? I mean, people really get caught up in certain trades. If you have a big loss, you got to figure out why you did that and get into your own emotions and psychology. Like, why would you do that? If cutting losses is your issue, then that's what you got to work on. And change your habits a little bit. Make sure that you have risk that is defined and that you're pressing the button. If you can't cut losses, set a stop loss. Like, I've been saying this for a long time. I don't care what anyone says about don't use a stop and market makers can see it and blah, blah, blah. If you can't cut it, set the stop because it'll take it out of your hands. At least it takes it out of your hands. If you have a risk level, you chose that risk level for a reason, but you just simply cannot cut, then set a stop. Like, it'll do it for you for the most part, unless it's a low float market stop kind of market order type thing, then you can still get screwed. But for the most part, yeah, absolutely set a stop. And when the trade's done, skip to the next trade. Really simple. It's a simple mantra, and it keeps you going. Like, that's the whole key. On to the next. Where's the next trade? Where's the next trade? And then you take, you know, like maybe at the end of the month, end of the week, maybe during the weekend, go through your trades. Go through all of them. What was the setup? What was my risk reward? What were my thoughts throughout the trade? Why didn't I do this? Why did I do that? What did I do correctly? Okay, do more of that. You know, this is a process of refining. And that's all there is to it. If not, you're just going to keep going in a circle and keep doing the same thing over and over and over again. And if what you're doing is not profitable, then you're going to continue to not be profitable, and you are wasting your time. Okay? You are wasting time and money if you aren't refining your strategies and refining your whole process every day. And that's kind of the goal I have, you know, for our group is to help you guys get onto that track, you know. How do I get better? What do I need to do to get better? Well, you need to refine, and you need to always be ready for the next trade, not thinking about maybe the money you lost in the previous trade and then being scared of the next trade. Don't be scared of the next trade, just be better. So that's kind of how I live. That's kind of how I my thought process is, and that's what it's been for a long time, since I figured out that that's what I needed to do, you know, to not be stuck and with the 90% who are stuck that way. Papa John's using stop loss orders for the foreseeable future on these high volume listed plays. If lost too much, not respecting my risk levels. That's awesome. Like, and you know what? Eventually you'll be able to take it off again, because you'll see, you know, it'll just become part of you. Like, you'll see that, okay, you got stopped out. Okay, it ripped. No big deal. On to the next play. Or you got stopped out and then the thing tanked and you were right and your risk level is respected. You don't have to worry about it. I still set stops at times. And I'll set stops, honestly, to keep me patient to the long side at times. It's easy to pull the sell trigger when you shouldn't be as well. You know, you can start that self-talk and kind of be like, well, is it, you know, and you kind of get that doubt creep in your mind and you're not sticking to your plan at that point. So, you know, if I really want to be patient at times, I will set a stop and leave it be. Yeah. David said, what is the average risk reward for a trade that you use? I mean, mine is 1 to 3. 1 to 3 is great. Okay, 1 to 3 is good risk reward. I'm looking for like more 1 to 5 range or more on some of these moves. All depends on the float size, how fast the stock's going to move, etc. So you know, when I say risk reward, all I mean is, yeah, is at least 3 to 1. You know, you got to have at least 3 to 1, in my opinion. I don't want to risk 1 to make 2. You know, 1 to 3. So I'd say 1 to 3 minimum. But it's just something that you see on the chart. Can it run? Is there room to run? And then what's my risk in comparison to where it could potentially run to? Are there any major levels on the chart with major volume that I have to be concerned about? So like Cure, for example, here's the daily chart. This is the one day I would be concerned about on Cure, right here. This day right here, where it did 58 million in volume, topped out exactly where it gapped down to, which is $3. So, you know, all of this kind of low volume. So in my head, I'm saying, okay, potentially this could run to $3. I can almost promise you there's warrants in this space between $3 and $6, where it double topped here. I can almost guarantee that there was an offering and that there is something in this space that is not good. So that's chart reading, you know, it's chart reading, knowing the circumstances. So put it this way, potentially if I thought maybe this could run to 3, which I don't, not with these current market conditions, not with this particular catalyst, it's all trade by trade. So like my thought process on Cure is not enough volume, catalyst is decent, not great, and 3 best case scenario. Worst case scenario, like back down to like $1.20, okay? So there is reward there, but the other components of this trade don't line up for me to think it's gonna get there. Do you see what I'm saying? That's another big part. So like, yeah, risk reward, my main concern level would be $3. Not doing enough volume. Catalyst isn't good enough. Still, you know, months and months of resistance here, even though it's low volume. So it's one of those things you have to line up you got to line up all the indicators for the trade. And in this case, I just don't see it happening, so I'm not going to take it, right? David said, but I don't use to take profit. I mean that when I'm 3 times my risk, I move my stop there and I try to keep going. I see what you're saying. So if you've made your 3, if you have 1 to 3 risk reward, when it goes 3, then you set your risk there. Yeah, that's kind of faulty because that doesn't necessarily have anything to do with price action, okay? The most important thing is price action. Can the stock keep going or not? So like just setting your stop in an arbitrary level is not going to necessarily be helpful. I talked to Leslie at that one. So last 5 minutes, guys. Papa John said, don't forget about your appointment. Thanks, dude. My mother actually just popped her head into my office to say the same thing. And it's at 1 o'clock, actually, my time. So I actually have 30 minutes left. It takes about 15 to get there. So we're going to go 5 more minutes just because I miss you guys. David said, what got you through the hard times in the beginning? What got me through the hard times in the beginning is I freaking love trading. I am passionate about it, just like you guys are. You guys are here with me, and you guys are trading every day because you freaking love it, right? That is what got me through it. That's what, and if you keep that passion alive, it'll get you through it too. I think it's the most important thing. It's just like anything. Like, why does anyone get good at anything? Usually because they're passionate about it. Sometimes, like obviously in your youth, it's because your parents push something on you. Mike said, stop making me so excited. Well, you should be excited. And if you're excited about it, it's because you feel the same thing I do. You know there's a way to be profitable. It's one of those things. It's the best freaking job. Like, it's the greatest thing ever that you can click your mouse a couple times and make, $20,000 or 10 or 5,000 or $1,000 or $500. $500 a couple times a week. So you make $500 a day all week. That's $2,500, and it could be 10 minutes of work. So it's one of those things. Yeah, that's a great question, but the main thing is I'm freaking passionate about it, man. That's what gets you through the hard times, just like anything. There's going to be, obviously it's not an easy game. There's going to be trials and tribulations along the way. You're going to have some really bad trades, some really good trades. But yeah, the on to the next will be very, very helpful. Even if it's loss, on to the next, loss, on to the next, loss, on to the next, loss. There will be streaks like that. It's happened to me where it's literally like 4 or 5 just in a row, just frustrating losses where I had to cut or whatever it is. And maybe some of them I would have been right. That's okay. On to the next trade. And that's all I care about. Like, what can I trade right now? Or is there a trade? And then obviously super important to recognize if there is no trade, then don't trade. So Chris said, I've put 2 years of my life into this passion, don't see myself stopping. Yeah. And there's a reason for that. Grab mine. And that's really what it was. I knew early on that I really loved this. And I knew early on that there is a way to do it, and just don't do what everyone else is doing. I had to figure out my own way to become profitable, especially buying stock. Like, definitely not an easy game, but everyone now has seen the potential. There's great potential there. So it's really a matter of sticking to it, keep on moving on to the next trade, but always go back for useful information about yourself. Don't just blindly keep taking dumb trades. That's not smart. On a party note, I have to say I called Cure almost exactly. I told you if we got a breakout over the pre-market highs, you might get a 10-cent scalp, and that's it. And that's literally all you got. We got to top out at 159 after breaking out at 148. So now it's coming back down to the low 140s. And the problem is that volume didn't sustain itself. Again, you see, pop, volume dies off. Pop, volume dies off. Then you get the big sellers who are trying to buy like 10, 20,000 shares on this breakout. It's pretty funny. But this is just literally experience, like seeing the market conditions, understanding there's not that much volume right now. Biotechs aren't running. The chart doesn't have too great of reward on it for the float, all that good stuff. I mean, it's just getting a feel, understanding charts that are liquid. You get a little breakout, probably getting a liquid breakout, and then it's just going to come right back down. And it may hold and break through 150 something tomorrow, whatever, but you have to keep expectations for each trade in line as much as anything else. If you're going into trades thinking you're going to get these slam dunk trades every time and these huge rips, you're going to be in it for a terrible surprise. My hope for you guys is that one or two of you, or maybe more, really get it. Not necessarily exactly what I do. It won't be, because you'll have your own trading styles. But like really get to understand risk reward and really get to understand the habits that are involved in being consistently profitable as to just like randomly profitable. You know, anyone can like throw a dart, say, okay, this stock, and buy it, or send, you know, some people like newbies can get really lucky. Like a newbie can come in and just crush for like a whole month, think that trading's the easiest thing ever, and then when market conditions change, get slaughtered, you know? So that's it for me for today, guys. It was good to be back with you. We'll do market close again tomorrow, maybe market open, depending on how I'm feeling in the morning and whatnot. I am going to switch this to a private, to like an invite-only type webinar scenario, so that we don't have random people getting like links and then popping into our webinars, because that would be very annoying. So I will get you all of those links via email. I have most of your emails. If I don't, I'll just get in touch with you and get your email. But I hope you enjoyed today. Like, it's one of those things, you know, the markets aren't running, so be super careful to the long side. And if you do get a pop to the long side in a market like this, take your profits quick, because everyone else is going to be too. Shorts are kind of just going to dominate markets like this, period. And who knows, maybe tomorrow we get a low float runner, you know, with some great catalyst that goes nuts, and then it lights up a whole sector. And that's when you start to get more aggressive. It's really that simple. So like on a day like today, I'm not going to just, you know, if I'm playing something, I'm going to be scalping it. But even better than that, no play whatsoever, right? Like that's kind of like the day I knew things changed a bit for me, is when I could literally just sit for a full day, watch the markets all day, not make a trade. That was a big breakthrough for me in terms of like discipline. So we will catch you guys tomorrow. Like I said, everyone be safe. There's not much out there for you right now if you're trying to get along. Have a good one, guys. We'll catch you soon. We'll catch you tomorrow.